He's
his
like
teeth
brushing his teeth
here.
or something.
Dude, he's flossing, man. Yo.
Hey guys. All right. Yeah, let's get started. Young Money Markets here. It's Young Money Pod. We got Josh, Nick, Eric. Tonight, I'm kind of excited for this one tonight because we get to pick on Nick for talking about loaning out his Bitcoin. So I think we should get right to it, fellas. What do you think, Nick? Tell us about it.
Yeah, well, originally the idea wasn't to start loaning out my Bitcoin and then borrowing against it. It was actually, I was thinking about selling Bitcoin. And I put it in our group chat last week, and everybody was like, what the hell are you talking about, Eric? I think you said, like, dude, you should lock up your Bitcoin, sign a contract with your kids that they can't sell it and they have to give it to their kids' kids. And I was like, damn, like, when you say it like that, it sounds like a bad idea for me to sell. For those of you who've been kind of like watching the last couple episodes, we have stumbled into this new protocol called Mirror that is very exciting, and we're super excited about it. And it offers really strong rewards, especially if you think that Bitcoin is going to be relatively flat for a while, which I do kind of think that we're probably going to trade flat for a while. I don't think that we just rocket from here up to 100K. Maybe that's something that we talk about as well, as kind of like why I think that, or what you guys want to talk, speak to about that. But I was sort of thinking like, if I put my thing about Mirror is if I sold all my Bitcoin, I would be able to basically see $13,000 per month in passive cash flow through Mirror, which is a platform that I trust, for better for worse. Maybe that in over the course of time, maybe I'll be proven wrong about that. But $13,000 per month in passive income is so compelling to me that I was genuinely considering selling my Bitcoin and moving it over into this protocol.
But that's not
like
guaranteed, right? That's based on today,
well, it's not.
on the
That's right.
what you're seeing today.
Yeah, and I was the thought was like, if I did that, then maybe in a few months, when I'd already racked up like basically $40,000 of interest payments, that do I think that Bitcoin will have run up $40,000 in a few months? I don't think so. So would it be worthwhile? Maybe. And then you have to look at the taxable event. That's the thing, is they kill you on the taxes, depending on when you bought Bitcoin and how much your gains are. So that led us down into like, Josh, you and I were talking, you basically were like, dude, why don't you just take out a loan against your Bitcoin, a small loan, so I wouldn't get the $13,000 a month in passive income that I could have gotten. But you could get more. I could have more than I currently have with taking out a small loan, and that way I'm not selling any of my Bitcoin or Ethereum, because I actually do also own Ethereum. And I think that's the better route to go down. And I'm going to do it tomorrow. Yeah.
Yeah, can you explain how they work? Because isn't that like borrowing your own money type of thing?
Right. So basically, the way that it works is there's a bunch of different platforms that you can use. And so one of the things, as I was sort of digging into this, was I was trying to figure out what the best platform to use was. It's basically like a bunch of different banks, right? So the same thing, if you're buying a house, you want to shop around, try to find the best mortgage. That's kind of what I was doing like over the last 48 hours. And so like the top ones that I've researched are BlockFi, Celsius, Compound, Nexo, Crypto.com, and Aave. And so I haven't looked into that one.
Yeah, Flash Stake is supposed to be really good because you get the interest up front.
Okay. Oh, okay. Well, maybe you can tell me more about that. But yeah, basically how it works is you lock up your Bitcoin or your Ethereum, whatever it is, as a form of collateral. And then they say basically, okay, well, we know you're good for this loan because you have this much sitting in collateral that's tied up. And so we'll give you this much, basically a stable coin, and we'll charge you an interest rate on that stable coin, but we know you're good for this loan because you have this collateral that's in the form of like Bitcoin or Ethereum that's tied up with us. And from there, you can do whatever you want with that loan. I mean, you can bring it to the fiat world and go buy a house with it, or in my case, I'm a degenerate now. I guess like I've never been really like a degenerate with anything, but I'm gonna take that loan and go park it in Mirror. But it's not gonna be so much that I'm like over my skis or anything. It'll probably be 10 to 15% of the total value of my Bitcoin and Ethereum. And so I could pay that off just, basically with some cash reserves or maybe some stock that I have sitting on the side anyway. But this is a way for me to basically like further leverage the cryptocurrency that I have, go off and do the things that I want to do with that, but then also like maintain and hold and keep all of my Bitcoin. So
we use these crypto banks like Celsius and BlockFi, and we lend them our Bitcoin, and we get a little interest. I think this is a good thing to actually go in and try to take out these loans. I mean, because why are we in these banks anyways? Like we should be able to use their tools, when we need, and getting a small loan now is kind of like testing the waters, kind of see how BlockFi does, and you get to read their terms. And I actually took out a loan yesterday in Celsius and read through all the terms, and your Bitcoin actually disappears from the app. So all my collateral that is locked up, it's gone for now until the end of the term. The term's a year. They gave me my money for the loan, and I'm using it and over in Mir. But that actually makes me feel safe because I'm thinking of the entire pool of folks who use Celsius. You got to think about them. You got to think about Celsius as the entity to stay solvent, stay safe, and they got to protect themselves. And this makes total sense to me. And it actually, after reading through the terms, I feel pretty good about Celsius as a surviving entity long term.
So the math you guys are doing is basically, I believe this organization that's given me this loan is going to exist at the end of the term, and they're going to give me back my Bitcoin. And I believe that the interest that I'm going to pay on the loan is going to be less than the gains that I'm going to make on whatever I'm going to use the money for.
There's one more thing too on top of that. So you are actually losing now rewards Celsius would pay you on that locked up collateral. And that's actually more significant than the loan interest itself. So
can you guys share what the interest is for the loans?
Yeah, actually I put together a one pager.
Well,
I'm going to share my.
I cut Josh off. I'm sorry. I just wanted to. I don't know, Josh, if you would.
I'll tell you. So I did a loan to value ratio of 50%. So let's say you have a $10,000 loan. I have to lock up 20 grand worth of Bitcoin, and they charged me 8% to do that.
Okay, and then but you're also losing the, what is it, like 8 or 9% that you would have had as a reward.
Right. So it's
Okay,
actually 6.2% on double your loan. So you got to double that. So that's actually 12.4% plus the 8%. So the real loan is actually 20% if you think about it.
Plus you have to keep up if the value drops below 20% of the Bitcoin that you gave them, you have to bring more collateral to the table.
Yes,
correct.
Yeah, so that's the piece where I think I'll just use like my own personal experience. I, over the past year, have taken out margin in Robinhood, which is another thing that we talked about on one of the first episodes. Personal experience. I wasn't super familiar with how the mathematics behind it worked. I just kind of went into it. Thankfully, I didn't go over a threshold that I was comfortable with. But basically, what would need to happen? So, if, like, let's say you had $100,000 in Bitcoin, and you want to borrow 20% of that. What you need to do is lock up 50, basically 2x whatever you're locking up. So you're gonna borrow 20 grand. You're gonna lock up 40 grand. So that's the portion that you're no longer receiving any interest payments on, that $40,000. In order for you to get a margin call, if you had all this $100,000 in the same platform, what will happen is, as Bitcoin goes down in value, BlockFi or Celsius or whatever platform you're using will actually eat into the remaining balance. So in this situation, that the remaining $60,000, they'll start basically eating into that as your debt to equity ratio goes up. And so basically, in order for you to get a margin call, Bitcoin would have to fall, in this scenario where you're borrowing 20% of the total value, Bitcoin would have to fall by over 60% in value, which means that we would need to see from Bitcoin at 60,000, we would need to see Bitcoin at 24,000, or sorry, 26,000. No, I think that's right. $24,000 Bitcoin before we would get margin called on this loan. So there is a risk, right? That's the risk is, and then in that scenario where you get margin called, you would have to pull equity, you'd have to pull money from another place to put it into this, wherever you're taking this loan out from. Otherwise, they'll just liquidate your position, which is obviously scary, but yeah, that would blow. But
the good thing is here, we're not taking that money and we're going and spending it. We're actually reinvesting it somewhere else. We're leveraging our investments. So unless our investments in Mirror go to zero, we still have the money, right? So
And you're not locking up anything in Mirror. Everything in Mirror is liquid.
Correct. Is liquid
Yes.
as cash, and actually much faster than cash.
Yeah. Right. So probably let me ask you guys this question, just to kind of, I guess, for the audience purposes, to give the other side. So how would you guys? What's a scenario where you guys would say, hey, I'm going to try to sell the top of Bitcoin? Is there a scenario where you would think that, or are you guys not thinking that way?
I definitely was thinking about that. I mean, that's why we sort of went down this path to begin with, or I went down this path, is because I was looking at Bitcoin. I was actually looking at Bitcoin at like 58, 59, and I didn't expect it to get over 60. And then of course it popped up over the weekend to 61 or a little over that. But I'm just sort of looking at it. You know what it is for me? I think that there's so much pressure from the retail guys on the whales to buy in. Like all the retail guys seem to want the whales to buy in to drive the price up, which makes sense. But thing is, if I'm a whale, I'm like, not off my back. Like it's not happening off of my back. I'm not being manipulated or FOMO'd by like these retail guys. Like if I buy into Bitcoin, then I'll do it. But it just feels like there's a lot of pressure, man, right now. And I feel like things just don't seem to just unfold perfectly when there's just that much societal pressure to, especially these big investors, man. Everybody's like basically basing this whole bull run on like, well, part of what they're basing this bull run is on FOMO, as if like look, Bitcoin is $1 trillion market now. In order to move this market up to $100,000 per Bitcoin, it's outside of the realm of control from the retail guys. You need institutional investors at this point to push the market up. But the institutional investors don't need to 5x their money. That's the thing. Most institutional investors, they have a lower risk tolerance. You know what I mean? They don't need to 5x their money. So the retail guys are saying like, oh, these guys are all going to FOMO in because they're going to miss out on a 5x or whatever. That's not necessarily true because they're already super wealthy and they don't need to 5x their money. And so I'm just worried, a little worried that we're a little too pushy, a little too aggressive with the pressure that we're putting on these whales to go and push the price of Bitcoin up. And just in general, I don't know if it's a great situation when you're applying pressure to people to have asset prices go up, because these people, they don't have to do anything and they don't have to respond to the pressure. Now, of course, Bitcoin could continue to prove me wrong, but I just think that there's a lot of pressure right now on it. And that's why I kind of feel like it's going to trend sideways for a while.
I know we're not really answering your question here, or I just wanted to add into the institutional blind. I had watched Meet Kevin. He had an analyst in the crypto department from ARK Invest, and he said they are way under invested in Bitcoin from where they want to be. And that's because of liquidity, and that's because there just isn't much options for them to get in, because they're big. They're big, and also it's harder for them to get into just holding coins on their balance sheet as an ETF. They have rules. They have these different rules, and there's hunger for it, I think. But I do agree with you, Nick, and a lot of the guys are pushy to get the institutions in, and the institutions don't have the hunger for the 5x or the desire to have the risk of their investment cut in half, which happens all the time with Bitcoin.
Okay, so one of the guys that's in this Discord community that I'm a part of, the Canadian Bitcoin Canadian investor community, he's saying, can you mention it's not that we want whales to buy, we just want them to hodl. Bitcoin amount on exchanges is going down by itself already. Ryan, that's what you were talking about.
Yeah,
last week.
Yeah, I think. Yeah, and I have some. I always have charts, so I have some charts to share today. Yeah, I'm just sitting listening and trying to absorb kind of what you guys are saying, because it's really an interesting perspective that I just don't think about enough. The idea of pressure. The way I think about it is right now there's a cash grab going on. Like we talked Thursday evening about all the organizations that are trying to get in with a Bitcoin ETF. Like name a financial organization right now, a large global financial organization. Do a Google search of them with Bitcoin, and you'll learn about what they're trying to do to try to take advantage of Bitcoin. Look at the organizations that every single week we get another organization putting their cash reserves into Bitcoin. So I've never heard anybody call it pressure. I see it differently, is that I see the headlines. I see the analysts saying, hey, we think Bitcoin could go to $300,000 in 2021. We see $200,000. That's the stuff that I see. And
yeah, like
this idea, Nick, of these financial guys having enough money that they don't want a 5x return. I think that's crazy. I don't think anybody.
No. It's not that they don't want a 5x return. It's not that they don't want a 5x return. It's that they don't have to have a 5x return. And look, I think there is tons of incentive for institutional investors to get in on Bitcoin. And that's why I own it. I mean, I own it. I own a lot of it. It's a third of my portfolio.
Yeah.
But it just feels like there's a lot of people who are kind of, pushing a pretty strong narrative into, the whole Bitcoin world. And I just worry about it a little bit. Can we just let it breathe? Can we let people come to it just a little bit?
Yeah. Well, let's look at some charts here, because I have some charts I thought this week that I thought were interesting. You guys can see this one here. It's a little bit of a longer term look starting in 2016, and you can see what happened. There was this line, and when we got to 2019, 2020, you saw us dip below the line. I mean, where we're at right now, if this line means anything, is we're kind of at the base of, essentially here in 2017. If we see something similar. The other thing I wanted to share, my favorite. I mean, this is
I
my
always
favorite
like this
graph
one.
here. Yeah, I mean, this is one of the reasons why I really like Plan B is he's like paint by numbers. I saw somebody say, and you can't help but look at this and be optimistic for, if Bitcoin continues in the middle between the 2014 run and the 20 I'm sorry, the 2013 run and the 2017 run in 2021. I mean, we're going to see somewhere in the range of $250,000, $300,000. So, and maybe that doesn't happen, but yeah, I guess I just wanted to give the audience what I would be concerned about more than anything if I was locking up Bitcoin would be that if I wanted the choice to sell, if you see like this parabolic movement, like what we've seen both times, like both times in 2018, and it was 2013 at the time, we saw like this couple week movement or even a couple day movement where we just see these huge
Yeah.
movements. And it's me, and if I see Bitcoin go from 200,000 to 500,000 in like a couple days, I want to have like maximum flexibility. And that's the only thing that I would be concerned about
So
for
would
our
you sell
audience.
there in that situation?
Oh man, I would really think about it. And I did a big study, and I've never shared this with you guys, but I did like a massive study before this bull run to try to give myself some dollar figures just to kind of hold myself accountable to trying to predict a top. And I don't know, Josh. My wife was actually, she was making fun of me today because a year ago, basically today, we had like $4,000 of stimulus come in, and Bitcoin went down to $4,000. So I bought one Bitcoin with the $4,000. My wife wanted me to buy a Tesla because I really needed a new Tesla. She said, "Well, buy a Tesla." And I said, "No, I'm gonna buy one Bitcoin, and next year I'll buy the Tesla with this one Bitcoin on the government's dime." And she's like, "You're still not selling. Like how high does it have to go? You're still not selling." So I totally respect Nick. Josh, you haven't shared as much about your feelings on this, but I respect, hey guys, there has to be a point where you take your profits. I'm looking at this thing as I'm putting my money to work, and it's returning to me profits, and I'm going to use those profits to try to make more money. That's the point of our podcast. It's not just sit and hold Bitcoin forever. So hey, I'm good with a different
Totally.
perspective. It's
But
just
Ryan,
it's hard for me.
dude,
Yeah.
there's so many people who don't have that perspective. There are so many maxis that are out there that would say, I will never sell my Bitcoin to go back to fiat because I don't ever want to have fiat. I just want to have Bitcoin. They want everything priced in Satoshis.
Yeah.
So
Well,
I don't know what you think about that,
But
but there are people who don't want to sell.
I swear that narrative gets louder during the bull market, and they start getting a little more quiet once prices come down.
yeah.
Because obviously, some
Yeah,
actually
dude.
sold last March. A lot of people sold, since obviously because look how much the price came down from the peak in 2018. So it would be interesting to see if we do get another sell-off. I think we do. It'll be interesting to hear the maxis how loud they are and their narratives.
Yeah, and I had one other to share here. And to be honest with you, I was hoping maybe you guys could help me with this because I don't do as much with options trading. But this was one that was shared, which is the Bitcoin futures analyze rolling 3-month basis. And you can see how it's making a pretty major move up. My understanding from this is there's a guy, Preston, I can't remember what his last name is, Psyche, or how do you say his last name? But Preston, he's a well-known guy. He's got
Yeah.
a Bitcoin podcast. He's saying that basically what's going to happen is there's going to be a Bitcoin squeeze, where there's just not enough Bitcoin, and I think this is evidence of what we're seeing right now is basically there's just not enough Bitcoin. Last time we talked about Bitcoin moving off the exchanges, and what he was promoting with this is an opportunity for financial institutions to take advantage of the spread. So, can anybody explain this chart better than I just did? Because I don't totally understand it.
So those
BTC futures annualized rolling 3-month basis. I'm not sure.
so
What do you think, Josh?
this is my guess is it's this is the price in 3 months based off futures. So what we need to look at is the future exchange for these markets. But basically what it's saying, and this is the day to day. So March 7th, they were saying about 20%. 3 months from now, Bitcoin price will be up 20%.
I see.
Hinted by
Okay.
the futures
Right.
for
Based on the
those
futures.
contracts.
Right.
And as you can see, as Bitcoin popped over the weekend, they expected even to go higher after that. It's like there was a confirmation because there was new all-time highs. They're like, oh shit, we gotta, it's gonna go higher. The bull runs
Gotcha.
back, right?
Okay.
So
So
I
if you
gotcha.
guys are doing crypto loans, why don't you find a way to 3x your Bitcoin by doing Bitcoin futures? Because that's like taking a crypto Bitcoin loan for the future.
not for me, man. That's different. Getting margin called, especially in a Bitcoin futures contract, does not sound fun.
Josh, so I don't know if I ever heard your answer to my question. Is there a point where you'd want to try to sell the top?
No, and that's why I like this liquidity pool participation, because I don't need to worry about trying to sell the top, because is there gonna be a top? I don't know. You know what I mean?
So you don't ever envision yourself like if Bitcoin just popped off and it went to $1 million, you don't ever imagine yourself wanting to potentially take some profit.
Something would have to happen. The monetary policy of all the central banks would have to drastically change. They would have to start tightening up. They'd have to become hawkish. There'd have to be too many things to happen that would change my mind, and I don't see them stopping this printing press.
Okay.
But I don't know.
Taking loans out on the Bitcoin. Why not? Right?
Yeah.
Yeah, and I want to. So I've been given the other side of it the whole time. I think I want to just mention one thing that you guys I didn't hear you mention, which is I actually really like the idea of taking loans out on your Bitcoin because if you can do it safely and in a way that you keep your Bitcoin safe, you're looking at Bitcoin as money. You're not using USD as collateral, you're using Bitcoin as collateral. So, I mean, if you think about it, that's really where maxis should be going down the road is starting to use their Bitcoin for collateral for loans if they're buying a house or what have you. So I actually really support it. It's just like I waited for 3 years to get to this year, and I want to maintain as much flexibility as possible is how I feel. Just in case something just went insane. I just want flexibility, I guess. So, but I respect what you guys are doing with that. I think
So real quick, I put together kind of an analysis, side by side analysis of what the different products are out there, and it sounds like, Eric, based on what you just said, that maybe I left one of the important ones out. Can you mention again, maybe throw it in chat, what that platform was?
Jeez,
that you were talking about?
I forgot exactly which one. I was
Flash.
Oh, Flash Stake.
Flash Stake.
It's
So
called
Flash Stake isn't on here, but basically, I've got my Ethereum. I've got Ethereum and Bitcoin here. This is the value in terms of total portfolio value of both Ethereum and Bitcoin. And then here are the different platforms that you can basically borrow and lend and borrow with Ethereum inside of. And same thing with Bitcoin. So Ethereum, you've got a couple additional ones. You've got Compound here and Aave. On Bitcoin, if you want to borrow, if you want to lend Bitcoin on Aave or Compound, you actually have to create wrapped Bitcoin, which is a taxable event. So if you have to sell your Bitcoin to buy wrapped Bitcoin, which is like an equivalent, but it's a taxable event, and it's a convoluted situation. So I didn't include Compound or Aave on the Bitcoin side, but here are basically all of the available lending APY rates for both ETH and BTC. So if you lend your ETH on BlockFi, they'll pay you 5.25%. On Celsius, they'll pay you 5.05% APY. And this is just annualized returns based on the value. And then for borrowing, if you borrow money from each of these platforms, this is what they'll charge you. And these are kind of the same rates for each respective. It's not based on Ethereum or BTC. It's just based on the platform. But then what you get here is sort of like a net value. So this is if you put all of your money into a platform and then you basically borrow just a small portion of it, what's sort of the net value after all the interest that they pay you minus the interest that you're paying back, paying back to these different companies. And so what you can see here is that for Ethereum, if you want to take a loan out, if you want to lend and take a loan out against Ethereum, BlockFi and Celsius are the same. So you're not actually paying a premium in either case here. Compound is objectively worse if you want to lend Ethereum. And then Nexo is slightly better than BlockFi and Celsius, and then Crypto.com. Thing with Crypto.com is you need to have CRO, which is kind of listed down here. I think, did I not put it in here? Oh, maybe I didn't. So you have to have 1% of your portfolio value in CRO, which is the native coin for Crypto.com, which is kind of a pain in the ass. But
or
they give
MCO,
you,
right?
if you're able to do that, what's that?
Or MCO, I think you can do MCO as well.
MCO, okay. Yeah, but if you're able to do that, then there's a potential opportunity for you to have, pretty optimal setup there. And then Aave is not as good either for lending out Ethereum. For BTC, it's slightly different. Celsius actually has a pretty compelling story against BlockFi. So if you just look at BlockFi versus Celsius, and keep in mind, this is just with the initial value of 70,000, you're actually paying about $350 more per year to borrow through BlockFi than through Celsius, if you were to just use Celsius. So if you're considering the two between, using BlockFi or Celsius, this is some data to help you understand kind of some of the difference, right, between BlockFi and Celsius. It will depend on whatever your initial value is here, but this is kind of what the difference that I'm working with is. And then Crypto.com is, again, slightly better, but this is dependent on some ownership stake of CRO. I think it's 1%. I've heard it's like you have to own 5,000 CRO or something like that. So this is sort of a little confusing. So these blue boxes I wouldn't pay too much attention to because there might be some nuance. You have to do your own due diligence with Crypto.com, but there could be some interesting opportunities there. But specifically for Bitcoin, just straight up between BlockFi and Celsius, there's a pretty meaningful difference between using the two, and Celsius is just a more optimal path if you're looking to not only lend your crypto out but borrow against it. So hopefully that's helpful for some people. I spent a little bit of time yesterday putting that together. So
that was great. How would you compare BlockFi and Celsius as far as security goes?
Well, so BlockFi will paint a rosy picture that they're very secure and that, you know, they've got the full support of the Winklevoss Twins, and their custodian is Gemini, which Gemini is owned and operated by the Winklevoss Twins, and there is a partnership there. But if you read in the fine print, essentially there's no real difference between BlockFi insurance policy and Celsius. So, you know, I'm not, now in the event that there was a hack or something, you could think that the Winklevoss Twins would step in regardless of the fine print and make it right. And maybe, you know, maybe you have that inside of your heart. You think that the Winklevoss Twins are just, you know, because they're there, it gives you a warm and fuzzy feeling. And that's a human element that, you know, sure, fine, sure, you know. But as far as just letter of the law, how these two are kind of written, the security between these two, or the insurance rather, it's the same between BlockFi and Celsius. Celsius is also a little bit more liquid, like
Owns of the cell tokens. It's tough because who knows? I'm sure there's somewhere you could see that maybe. Twitch is down.
I just saw it go down, but looks like it's back up.
Yeah, it looks like it's working. Yeah, you need to see how much cell that who owns what for the cell, and then I don't know that, but for me it gives me kind of a gauge to see an extra piece of inside. So if the cell token's doing good, it at least lets me know, like, you know, they're paying their some of their clients out. The ones outside of the United States, you can earn your rewards in cell instead of in kind. So if you have Bitcoin with them and you're earning 6.2%, and you're in the US, you can only earn Bitcoin rewards paid in Bitcoin. If you're outside of the United States, you can earn these cell tokens, and the interest rate is actually higher. What is it, like 1% higher? So it'd be like 7% or 7.2. It depends on the crypto. So that actually gives it entices the users to want the cell token. And also when you take out loans, your interest rate is like 5 or 10% lower if you are paid in cell instead of USD coin or PAX or a different stable coin.
Okay.
So there are these little incentives that kind of like, that, you know, makes me feel warm and fuzzy inside about the cell token.
Nice. Well, do you guys want to talk a little bit about the stock market? We've been heavy on crypto. How are you guys feeling for this week, going into this week?
this is the you know, we're gonna see. This is where, you know, we've had this past week was relatively bullish. We had a punch upward against the bears. You know, we've had some conflicting or interesting sort of data come in. The bond yields can't seem to make up their mind in terms of what they want to do. I think this is the week where we see if we're either going to break free of what was appearing to be like a little bit of a temporary bear market, and we're going to start ripping back up to the upside and just continue on with this, you know, long-term bull trajectory, or we're going to see more pain in the market and the bears will come back and persist. And so, you know, I'm definitely curious to see what happens tomorrow. Like, I'll tell you one thing. So with Mirror, it has a little bit of like a futures element to it where it kind of projects out what the price of these underlying assets will be. And the people on Mirror are projecting a pop. They're thinking that there's going to be a pop in some of these underlying assets. Like, so with Tesla on Mirror right now is trading at about a 4.5% premium to where it closed on Friday. And so that's acting kind of like a futures market where it's basically people thinking that it's gonna go up on Monday. So, you know, we'll see. But if we see more pain, I don't know. We could see a little bit of a, I hate to say like death spiral, but we could see, you know, for the next 2-3 weeks, maybe even the next month or two, we could see more sort of uneasiness in the market and maybe some downward pressure. But if this week rips more to the upside, I don't think that the bears are going to really be super incentivized to continue to put, you know, continue to push downward on the price of these assets. So
Do we want to
I
talk
think
about?
this week is huge.
I was going to bring up the bond chart, the 10-year bond, if we're talking about
do it
stocks
up.
and the markets and stuff. And this, Nick, you and I talked about this, about where we think this is headed, and the trajectory has been down, right? That means interest rates been down. This one goes back to about 1980. This is the 10-year government bond, the Treasury, and this is the interest that it's paying. So as you can see, it's just straight down, pretty much straight down for how many decades? 4 decades. And we got a little ahead of ourselves with this extra printing, I think. Down here, right? Like people thought like, oh, this is a bottoming pattern, right? So bond yields are going to start coming back up. But the market's like, nope. And they came all the way down to 0.5%. And I'm not convinced we go up. I'm really not. I think we actually stay down here. I think maybe we'll hit 2, you know, somewhere around here, and we come back. And eventually we see negative interest rates in the U.S.
Yeah.
Wow.
Well, it's
Yeah,
the only
dang.
it's the only way. It would be. I mean, talk about what Nick was saying of, you know, what happens is I mean, I guess it's always bear or bull, but I mean, from what we're seeing, Nick, I mean, if I saw somebody on Twitter was saying, you know, if the Fed came in and said we're going to raise interest rates by 0.5%, it would be devastating to the market, and the market would
Yeah.
respond in kind. And that's where we're at. We're so fragile right now because
That's
of
so true.
what we've done.
We're
Yeah.
so fragile. We are
Look
so
at the Fed.
fragile
Look
right
at the
now.
Fed funds rate. We have nowhere to go. The Feds have pegged it almost to basically zero. They're running out of powder. They're printing like
Yep.
crazy. Interest rates are pegged at basically zero. What else do we do?
There's nowhere else to go.
That's why,
So-
you know, for me, I'm so uncertain about where my money is going to actually work for me, that I have gone so heavy on really like 2 things: Tesla and Bitcoin and Ethereum, but mostly Bitcoin. And I've just gotten super concentrated, super focused, you know, really doubled, tripled, quadrupled down on those high conviction. This is where I'm at just right now and just in life in general. I don't have enough money to just get rich on investing in the S&P 500 or in a basket of stocks or whatever. Diversification for me just doesn't get me to where myself and my family where we want to go. And so I don't know.
You're more risk on.
I'm more risk on. You only live once. I have dug so deep on Tesla and Bitcoin, and you only get a limited number of super high conviction plays. And when you come across these things in your life where it's like, you know, wow, it's so high conviction, you've done the research, you've done the homework, you've looked yourself in the mirror, and you really understand, like, if this asset drops in 50% in value, is that going to rattle your conviction, or are you going to look at that and say, I want to buy more? You have to be so honest with yourself, because in that moment, that's where all this like diamond hands shit, like all that stuff goes out the fucking window when you see your money drop by 50%, right? So for me, those 2 things are Bitcoin and Tesla. I've quadrupled down Now, do I want to get more diversified? Yeah, I definitely want to get more diversified. So new money that I'm getting is going into Apple. It's going into some different companies, some different stock. But as far as what I've done with my portfolio during this crash and just right now in time, I've just very, basically gotten very specific about my investing, and hopefully it pays off in the long run. And I'm just really behind my high conviction plays, and right now I'm just all about conviction, just that buying stuff that you've got a really high conviction on. We've got a couple questions. One of the questions is, will Charizard value ever go back down?
So I looked at it.
2019 prices.
And this is interesting because this brings up, like, are these physical cards, are those going to be a thing in the past with all these NFTs? I'm looking at the Charizard price right now, actually, and dude, some of these, I'm wondering which one's the real price. Like, is this real? This $23,000?
No. These are selling for way more than that. You must be talking about double KV. I don't know. Is that a what is it? A Beckett 10? It's probably not, right? So Josh, Google Charizard base edition or first edition Charizard Gem Mint 10. Dude, they're selling for like $150,000. No. These aren't the right prices. These are selling for like $150K.
What?
Yeah, PSA. First edition PSA? Charizard PSA 10 price. You can't look at these because these are not right. Can you scroll down?
Wow.
Yeah. There we go.
Logic one.
Yeah. So, dude.
Oh my.
Dude.
I swear my brother had one of these things.
Don't buy Bitcoin.
Oh my word.
Buy Charizard.
For sure.
This is worth more than a Bitcoin.
20 years ago.
Yeah.
This was in October.
Yeah. Yeah, dude, it probably will go down, man. It's probably a little bit of a bubble, to be honest. I saw somewhere that basically, like, if Pokemon were to ever end, basically like 10 years after that, that's when prices would start to go back down in price. But that's assuming that Pokemon ever ends, and I don't know. Maybe Pokemon just goes on forever. It's too profitable for Nintendo.
But there's a market.
Yeah.
Guys, I have a
Logan Paul.
What's that? Oh yeah.
Spends $2 million worth. I didn't even know this was a thing. Sorry,
Yeah,
I didn't mean to cut you off there.
No.
Yeah.
I'm not as much into the Pokemon. I was gonna bring up some stock stuff, but
bring it up, Ryan. Let's go.
I had to take a peek.
Irma Jerdal Zal, dude. If you have more questions, though, hit us up in the chat because we want to engage with you guys.
For sure.
Absolutely.
That was interesting.
Yeah. Well, I think it's kind of the point of everything that we're talking about, like Bitcoin, for example, where it's just the scarcity part of it, right? Regardless if it's baseball cards or NFTs or Pokemon cards, right?
Or real estate.
Real estate. There you go. Yeah. So guys, I spent a little bit of time putting together my top 5 watch lists for this week for those of us that are doing a little bit of day trading. And I thought maybe I would drop them here for you guys to take a look at. I have some of the charts up. Stocks. So number 5 is Canaan. Canaan is a Chinese computer hardware manufacturer, and they're doing a lot of up and to the right. You can see here. This is one of my top stocks, number 5, that I'm going to be watching this week for day trade.
Do you have a holding period for these?
12 hours is what I work with. Yep.
Okay.
But that's just my strategy.
I'm just letting the listeners know if they want to get in what You know how long they should
So,
hold it.
so Ryan, on this,
Yep.
what is the what's the criteria? Why is this in here? Why is this your top 5? Why is this
Yeah.
number 5?
Yep. Yeah, good question. So, so what I do is I look at the Sharpe ratio over a 2-year period. I look at the Sortino ratio over a 2-year period. Both of those are basically measuring how well it's performed, the returns over a couple year period. The Sortino is specifically looking at the negative returns. So basically, it's factoring what are the best stocks that haven't lost money, and so I look at those two. I evaluate about 1,500 stocks, and then I also look at the near term. How is it done over the last 30, 60, 90, all the way back to about 6-month period, and I compare it against about 1,500 other stocks in that same period. And then lastly, I look at the most recent 24 or 48 hour period. So I kind of start all the way out and I say, okay, what's had some really good support? Because I always try to track the money. So my strategy is always, I'm not a guy that tries to buy the bottom. I'm the guy that tries to ride the top. And so what I do is I'm looking for where the money is, and then I jump on. I try to jump off before the money leaves. So that's how I came. That's how Canaan got on my list. And I'd be happy to dig into a little bit more of the data on it, but those are the things that I'm focused on, specifically Sharpe and Sortino. Have you guys ever used Sharpe or Sortino ratios?
Mm.
No. Okay.
So
Bitcoin's-
it's momentum trading basically.
Well, it's specifically looking at the monthly returns. Both of them are looking at the standard deviation, the monthly return. So basically, it's looking at how consistently did it increase over the last 2 years. And specifically, a lot of people don't like the Sharpe ratio because the Sharpe ratio basically it doesn't account as much for the downside, the losses. But when you look at the Sortino ratio, all it looks at is the downside. And what that means is that if you use the Sortino ratio and you compare it a bunch of stocks, you would find the stocks the highest Sortino ratio are the stocks that have performed the best over the longest period of time with the least amount of dips. That makes sense?
Yeah.
Yeah. Yep.
So yeah, that's what I look at. That's what I look at. We got another one here. VipShop Holdings Limited. This is another Chinese company. This is a Chinese e-commerce company. VIPS. Canaan with CAN. Number 4 is VIPS. I think the website's actually VIP.com in China, I think, but it's a big e-commerce site, and you can see the type of growth that they've seen over the last. I'm looking at the last month. So most stocks we saw a dip, right here, and you're not seeing that with these, and I find that through the data. Number 3 on my list, this is Viacom CBS. I'm not sure what's going on exactly, but there's a lot of investment right now in the communication space. So Viacom CBS, where it's kind of taken off once again. I mean, it tried to correct here, like everything else, but then took off. That's number 3 on my list. Number 2, Discovery. This is once again Discovery Channel. This is Discovery group. So this is a lot of the TV shows, History Channel, Discovery Channel, Travel Channel. They own all that stuff. They just launched I think Discovery Plus, and you can see the market's really liking them right now. And then surprisingly, I typically have taken this off my list because it's been so manipulated, GameStop. But GameStop is one of the best Sharpe and Sortino ratios over the last 2 years. And you can see that it hasn't gotten hit as hard. After we saw the craziness here, we're actually continuing to see it end here. We're actually continuing to see it, still play up.
So
yeah.
you'd buy this in the morning and sell it the same day?
Yeah, yep, or sell it at the close, or buy it at the close and sell it at the open is what I've done as well. But Yeah,
I was interested in it because they pay. It's the highest APR on Mirror, so I thought about it. I thought about getting into it this weekend.
so I use data. I use data that basically predicts, what's the probability that it's going to go up over a 12-hour period, and then I take all the emotion out of it, and so I score it. I analyze it based on the price change, and then I buy it if the data says to buy it, and then I sell it when the data says to sell it. And so, but that's my top 5: Canaan, BitShop, Viacom, CBS, Discovery, and GameStop. So that's what I'm going to be looking at this week.
Yeah, GameStop is just one of those things where, I mean, eventually it's gotta come back down, right? I mean,
It has
it
to.
can't be up. It can't be up here for forever. It's got to come back down. It's a dying company, right?
Yeah, I'm not a long-term holder of GameStop, but I when the data says to take advantage of it, I take advantage of it, and it's still going up. So um, I'm trying to ride it while I can.
Yeah, I mean, for me,
GameStop
man,
scares me. It really scares
yeah,
me.
dude. To GameStop, but even more than GameStop, AMC.
Yep.
AMC is just not something that I want to be holding, because those companies are those are dying companies. I mean, I don't know. Specifically AMC. GameStop, maybe they could reinvent themselves, but I don't know. It'll be a uphill battle for them even, I think.
Yeah. I think one of these days, probably not this time because we're gonna run out of time, but one of these times we have to talk about GameStop and how the financial markets shorted 300% of the available GameStop stocks. You guys have talked a lot about synthetic stocks, and people ask the question of, well, is synthetic stocks real? Well, is the stock market real? Because the financial institutions, what was their names that shorted them?
Oh,
Shorted which one?
GameStop. The-
Citadel?
no, it
it
wasn't Citadel. It was Marvin.
No.
Melvin
Marvin.
Melvin Capital.
Melvin Capital. They
Yeah.
shorted 300% of the available stocks. That's not real. So, but
Yeah, for me, man, I'm just saying Tesla. I'm thinking that this week, if I had to guess, which it's totally a guess, I think Tesla continues to rip to the upside here. I think Tesla right now is like an $1,100 stock. That's what it should be valued at. It's trading at just around $700. I mean, you could qualify me as probably like a hyper Tesla bull, but
Tesla
I
Maxi?
just, you know what it is? You know what it is? I was thinking about this the other night and why I'm so bullish on Tesla. And I've done the discounted cash flow thing. I've looked into the numbers and the data, but all data, and this is just a personal belief that I have, all data comes down to an emotional decision. Okay? All decisions are emotional. Data is a guide to you making a decision, but at the end of the day, you have to make a decision on top of data. We're not robots, we're not machines. You have to make decisions based on human feel, human interaction. Even Ryan, like your trading strategy, you have a inkling, you have a belief that your model is going to be profitable, right? And that's why it's been profitable in the past. You could say like,
Yeah.
That's why it's going to be profitable in the future, but that's not necessarily true. I think we could probably agree on that. Like, that's not a guaranteed fact. You just have a feeling that it's going to be true in the future. That's why you continue to do it. So the thing with me is, I think about Apple, I think about Steve Jobs, and I think about culture. And the thing about Tesla that people don't understand is that Tesla has created a culture of disruptive innovation. And it's something that culture is this thing that you can't quantify. You don't really understand until you're a part of something that that has a culture, and then you start to understand like why do the most successful companies in the world, why does success why does success breed more success? Well, this thing called culture is so powerful because it just instills this sense of like you're gonna disrupt, you're gonna do this thing that's different and crazy and out there. And that's why Ford, Tesla, and Ford and GM could never compete with Tesla, is because their whole employee base, from the CEO all the way down to the lowest level person in the company, they are operating a completely different culture. It's like comparing the Browns, the Cleveland Browns, to the Patriots, right? Or anywhere that Tom Brady is at. The culture difference is so massive that the Browns could have a more talented roster, but the Patriots are going to outperform every year. And the reason for that is just that culture of just success and excellence. And special cultures are only built once in a very long time. We saw it with Apple. Apple continues to perform. We've seen it with maybe a couple other companies, you could say. But with Tesla, I think people are not understanding the windfall effect with Tesla. The culture that's existing there is not one of just complacency. It's not like Intel. Intel is like, how can we just do a little bit better than last year? How can we just do just as good as the Apple team or whatever? Tesla is a completely different beast. They're going after, they're on their own mission. And this culture of innovation, disruptive innovation, it's something that you really can't account for until you've seen it on the inside. And that's why they're going to blow people out of the water. People don't understand. Trust me, like, they're going to continue to destroy the competition, because they have this secret sauce, man, that runs through the blood of all these people that have been working there this whole time. And they're going to just continue to dominate. And it has nothing to do with their current technology. It has nothing to do with their price to earnings ratio. It doesn't have anything to do with anything other than just their culture and their ability to just continue to innovate. So
what was your thoughts, Nick? What was your thoughts when the news reports came out, like that they had a bunch of VPs and operations people that didn't like the culture and didn't like Musk and
yeah, to be fair, like, there's always people who come out, in these companies like Apple and Amazon and Tesla, where they're saying negative things about the culture. Yeah, I mean, look, let's just not kid ourselves. Elon Musk slept on the floor of the manufacturing facility for months on end, okay? He holds his team to a standard that a normal company doesn't hold their employees to and doesn't hold themselves to. That's because Elon and Tesla, they don't have a normal company relationship. Like, you look at a normal CEO, they put their CEO hat on, they come into work, they sign out, they go home, and they're with their family, and that's it. This is different. This is like, they're going to change the world, and they're in it, and this is the life's mission. And it's not like about just checking a badge in the morning and looking pretty in front of a camera. It's sleeping on the floor of the manufacturing facility. It's having, deep day in, day out conversations with the engineering team about how we can make the product better. This is a complete removal from the Ford and the GM, where the CEOs of those companies are, I don't know what they're doing, but I would assume that they're probably talking with their finance team, talking about how to, make their numbers look better for the upcoming quarterly earnings report, doing PR rehearsals, things like that. Elon is saying, you know what? F all of that. I'm not even talking to you guys. All I'm focused on is how I can make the product better. And over time, that divide that gets created there, oh man, it's so powerful. And because at the end of the day, the only thing that matters is how good your product is. all the financial stuff, the numbers, like, and I'm a financial guy, all that stuff that's a secondary issue. The primary thing is how can you make your product the best product that's available on the market. That's all Elon's focused on. That's all Tesla is focused on. And people still don't get it. I mean, people still don't understand that we're witnessing a transformative, once in a generation type of company, once in a generation type of leader. And if I think about my own investing, I look around and I ask myself, I'm looking this dead in the eye. I'm looking it dead in the eye. I understand it for what it is and who these people are. And I have other options, but I know I'll be kicking myself later on the road if I don't just invest now, today, in this person, get behind this company that I think is going to change the world. And that's exactly what I'm doing. So I've funneled all my resources into Tesla and Bitcoin. And but we're sticking on Tesla, and I'm gonna ride it out because they're gonna destroy people. People don't even understand. It's not even close. It's not even comparable. And people who think like Lucid and Neo are gonna eat it. Neo has a chance to eat into some market cap. Lucid, not so much. You know, honestly, not so much. Tesla is gonna have a fully autonomous vehicle, a vehicle that can drive from point A to point B with no human intervention. It's going to change everything. It's going to change the way that goods are moved around the world, and people are sleeping on it, man. They don't understand it. They see it. They see that Tesla's an innovative company, but they don't understand just how radically different they are culturally from these other types of companies.
Yeah.
So, you know, is the culture aggressive? You know, is it probably at times hostile? Yeah, but that's because they're not just a company where you go to rest and vest. It's a radically innovative company that's goal is to disrupt society. And if you're not all in, then yeah, they'll show you the door probably eventually. But if you are all in, there's a lot of rewards to be had, and they're gonna continue to change the world, and that's just how it is. People need to wrap their head around that. Otherwise, they're gonna get run
with
over.
you, man. I'm very with you because it takes a special kind of person to see their future that they're envisioning, and I think a lot of it's younger generation, kind of tired of the smog, tired of the noise, tired of just this inefficiencies that we live in today. And Tesla's already starting to solve it. One of the big things I hate about traffic and the roads and living near a highway, well, it's just getting busier each year, but those trucks, when they come by, they're disruptive.
They are.
I wonder how many
totally.
people lose sleep from a frickin' semi driving by, downshifting. It's so annoying, and just that small little piece. Like, I want to see Tesla. I want to see electric trucks dominate. Just for that reason, I'm tired of hearing those things, man. They're annoying, you know. And that's just one simple aspect of electronic autonomous trucks, and it's just,
Dude, and we're just at the
right.
beginning.
It's
We're just at the
right.
beginning. It is, and we're just at the beginning of it, where we're seeing the iPhone. That's what this is. The Model 3 and the Model S and the Model Y, this is the iPhone. But don't forget, Apple has all this other stuff, the iPad, the MacBook, all this other stuff, right? And they innovate. We haven't even seen any of this stuff from Tesla yet, man.
I know. The roof,
Just
panels,
wait.
trucks,
Just wait.
batteries, they're just getting started.
They're just getting started, man. And the success will beget success.
I'm totally with you.
As they acquire more resources, they will hire more people. They will disrupt and innovate in other areas that you don't understand yet. We don't have full visibility to yet. but that innovation culture and that disruptive sleep on the manufacturing floor, sleep on the ground culture.
He's crazy. That dude's crazy.
Dude, that will persist. It will go through the whole organization, and it will create this culture of innovation. And we're just at the early onset. We're seeing the iPhone, and yes, it's an expensive company, but in my mind, you have to be out of your mind to bet again. Anybody who's shorting Tesla has got to be completely out of their mind. And I actually think you might be out of your mind and not be invested in Tesla, just period. Because I think it's just such a once in a generation company. So that's a bull call. Any of you guys out there who are Tesla investors,
I like it.
I think you're doing the right thing, man. I really do. I think you're on the right side of change, just the human species, and this company is just one that you just want to be behind, and just stay with it, man. Don't sell it. Don't sell it on any
Model
dips.
the Tesla.
Hold the Tesla, man. Give the stock. Give that stock to your kids. That's the type of company this is, man.
That's pretty much all I own right now is Bitcoin and Tesla. That's 90% of my portfolio.
But you and I, Josh, our ratios are inverted.
Yeah,
mine is like mostly Tesla.
I'm 80 Bitcoin, 10 Tesla. But I want to get
like
more
70 Tesla, 30 Bitcoin.
I want to get more Tesla, but the little price discrepancies on Mir right now. I would have a lot more if it wasn't for that.
Okay, so somebody said Tesla and Hut 8. Let's fucking go.
Yeah,
let's go. Dude.
I like Hut 8 too. I'm waiting to see that on Mir. If they get Hut 8 on Mir, I'm an investor instantly.
So I love Hut 8, man. I love
cool.
Hut 8. Hey, Supleg, if you've got a question, I know we're gonna wrap up here really quickly, but if you have a question on Hut 8, man, throw it in the chat, and we'd love to talk about it. But definitely bullish on Hut 8 and
for you
Tesla.
on those miners. Is there a security risk of those things either being stolen or tampered with or destroyed?
Which part? The miners?
They're miners. Because they're a physical miner at a place. Let's say we get to a place where there's civil unrest, and if the no coiners are just Bitcoin's at $1 million, the no coiners are like, oh, we don't have any Bitcoins. Like, fuck these rich.
Well, the
Bitcoin it'll be because of electricity usage.
So the Bitcoin is all not held in the actual physical miner, right? Just so we're on the same page. The Bitcoin is on the blockchain.
100%, but the miner, that's an expense for Hut 8 if they have to replace these things.
Yes, definitely. Is it a risk? Yeah, it's a risk, but you could say the same thing about like an oil refiner, oil company, Chevron, right? Their infrastructure is a risk to them. If there was a malicious attack on an oil refinery, it's a risk to them as well. Yeah, I think that's a small risk. But I think about Hut 8, they're protected somewhat as compared to like a Hive or a Riot or a Merapatan group, where those companies are selling all of so they're even more reliant on the actual equipment, the machinery to continue to mine, because they're selling everything as they go to pay their expenses.
Absolutely silly.
Which is silly. And the reason they're doing that, by the way, and I want to address this, is because they want to look good for the Wall Street analysts who are very used to looking at an income statement and a balance sheet, and they're looking at things from a very traditional, basically lens, right? As opposed to Hut 8. Hut 8 is hodling every Bitcoin that they mine. Every Bitcoin they mine just goes to the balance sheet and they hodl it. So they own over 3,000 Bitcoin now. And if we think that Bitcoin does anything near what we think that it could eventually get to, I saw Michael Saylor today on a podcast. He was saying that one Bitcoin could be worth $5 million in the next 10, 15 years.
That's crazy.
Companies like Hut 8 who are hodling Bitcoin, they could become the new banks. They could become like a bank for like Bitcoin, basically, right? And they could pay off dividends.
How are they paying for their operations then? Like their operational expenses?
Paying for their operation. They're paying for their operational expenses, one through debt, which they just paid off. They paid off their latest tranche of debt. So I think as far as today goes, they're
How are they
debt free.
paying it off though? How are
They'll
they
take
paying
more
it off?
debt on. Yeah, so they're paying it off through lending their Bitcoin out. So they lend it to one. They don't rehypothecate. They partner with one institutional borrower who they charge a 4% interest rate, and that way they mitigate their risk. So it's not as they still own their private keys and things like that. But then they get that passive cash flow of 4% interest rate, and they trust the institutions that they lend to, and then they pay off their operational expenses with that cash flow that comes from their lending.
I think the bigger risk wouldn't be some type of malicious attack. I think it's the people are concerned about the electricity usage, and that's probably a topic for another day, because we're probably a little over on time. But that's everything that I'm seeing that's against Bitcoin right now is how much electricity the network uses. So I think the potential of a state or a country shutting down a miner, because or pressure from social pressure from environmentalists or something like that would be
with
a
HUD
risk
8
for a miner.
with HUD 8 they're using the flares,
Natural gas.
the natural gas flares
Is it
that come
100%?
from. No, it's not 100%, but I think it's 60% the flares, and then they're taking 40% from the grid. And so these flares would otherwise just go into the atmosphere and it would be wasted, completely wasted. So
my point, no, Nick, is that I haven't noticed these people being very realistic with or understanding of anything. If anybody tries to explain to them that like 70% of Bitcoin is mined with reusable energy, they're just like, look at my chart, and their chart is their chart is using like averages and like, they don't actually, like, nobody actually knows how much energy or how much of it is renewable energy. I heard a guy yesterday say like, well, I bet a lot of it's stolen energy, and it's just like, where are you getting this stuff from? Like, these people aren't reasonable. They're not here to hear your explanations.
They're just mad they didn't get in.
Yeah.
Might be right. So, well, cool. Well, yeah, maybe we're winding down here. Do you guys want to just real quick? I know a lot of people are listening, are here for crypto. Do you guys want to share maybe what you think crypto is going to do this week, and then we'll get out?
Suplex said something about HUD 8 on here on the chat.
Yeah, so HUD 8 lends BTC to make fiat, sells some BTC, tries to minimize it, or private placements with institutions for operating expense. Yeah, so it's basically they're operating a data center. So they do some data center, they lend some of their data center space out to other third parties who are trying to use that type of facility. And that's how they make some of their passive income. But I didn't know they sell any Bitcoin. I thought they didn't sell any Bitcoin. You said tries to minimize it. I'm not aware of them selling any Bitcoin, so maybe I need to do some more research on that. But yeah, for sure, man. Thanks for putting that in there. Definitely HUD 8 is a company that I'm heavily invested in, and I think that's a company that I'm super bullish on in the long run. But yeah, as far as crypto goes, I'm going to be a little bit more bearish this week, man. I think Bitcoin trends down. I don't think that we close the week out over 60. What headsets are you using? Sorry, off topic. These are the AirPods Max, man. I'm not sure if you're asking me or if you're asking Ryan.
Yeah, I'm using. I think these are the Samsung Bluetooth headphones. Noise canceling.
Those are the same one Meet Kevin uses, Nick.
Yeah, man. Cool, thank you. Yeah, for sure, dude.
Those are dope.
Yeah, so I think Bitcoin trends down this week. I think we end the week a little bit under 60K, which, just for the record, I think is very healthy. I don't think we need to just go to the moon from here. I'd like to see us just chill out for a little bit. I think that there is some pressure in the market. I would really like to see some quieter news stories around Bitcoin, and then let sort of investors kind of come in slowly and steadily, build that conviction on their own, and then we kind of launch from there. But I think that crypto cools off this upcoming week. That's kind of what I think.
Yeah, I think okay. So I looked, and I'm gonna get a stimulus check on Wednesday. So I feel like everyone's getting their stimulus check this week, and they're gonna all buy it, and then next week they're gonna freaking crash it on everyone.
Speaking of this,
they sell. They just sell everything.
Speaking of the stimulus checks, guys, let's work something out where we all put some, whether it's paper or real money. Let's do something with the stimulus checks, and every pod maybe we'll update how our individual investments are doing on the stimulus. What do you guys think?
Yeah, let's do it.
Yeah, I'm down.
And we can just keep up kind of like a leaderboard or whatever. It can be paper, it can be real, it can be whatever you want it to be.
Yeah, let's get it. I'm down.
I'm
Nick,
down,
what do you
man.
think?
Yeah.
Oh,
Let's
dude,
do
I'm
it.
down, dude.
All
Look,
right.
you already know what it is. If Tesla's gets to the upside, I'm fucking printing money, dude. And if it takes a shit, I'm losing money, man. That's just what it is.
Think about it. Maybe like Thursday. Let's try to get in our strategies or whatever. Everyone good with that? All right,
I'm
Josh.
definitely good. I'm definitely down.
All right. Josh, what do you think? What do you think this week for crypto, or the next couple weeks?
I mean, I said sideways down last time, and it just keeps going up. Because really, I want it to just slow down. It needs to take a breather. I have no clue. I really have no clue, and then that's why I just hold the dollar cost average. If I had to guess, it goes up. It's gonna just go up.
Yeah, I'm with Eric. I think the stimulus is going to pull in some money, and I don't think we're going to get dumped on. I think we got a couple weeks here where we're going to see alts run a little bit, and then I think Bitcoin's going to follow after that. So I think we're probably going to go sideways a little bit with Bitcoin though.
Money has to come in first, and then all of it's gonna pump a little bit, and then they're gonna like crash it on everyone, make them sell it, and freak out.
I hope you're wrong, but maybe you're right. So. Well,
By
cool.
the way, Greasy Tundra is me. So just in case you guys are wondering.
Okay.
Try to be famous.
That was my trying to be famous, dude. That was my original Xbox name. They assigned me that name. I was like, you know what, dude? I live in Minnesota. I lived in Minnesota. I'm like, you know what, Tundra, that's cool. I can be Greasy Tundra, So anyway.
All right. Well, cool. Well, thanks to everyone that was in the chat. We appreciate you guys. We're going to be back Tuesday night, 9 Eastern, 6 o'clock Pacific. And I guess we're out, right, Eric? You want to send us out?
That's Young Money Markets. Okay, we're taking you out. We'll be back Tuesday, 6 p.m. Pacific, and then what's that, 7 p.m. Central or
9 Eastern.
9 Eastern. Okay, nice. Cool. All right, Young
Do
Money
yourself a
Markets.
favor and buy some Tesla this week. All right.
Buy some Tesla. I'm gonna buy some Tesla actually. My wife wants me to buy a little bit of Tesla. So I'm gonna do the weird Tesla thing.
Listen to your wife, man.
So hell yeah.
Happy wife, happy life, man.
Happy life.